This JTS Mortgage Minute is brought to you by JTS & Company Mortgage Professionals.
Hey, good morning. I'm Jeff Farnham. Is one of your New Year's resolutions to become a homeowner? If so, JTS & Company can help you get pre-qualified for a home loan. Our text and online application make the process fast and simple to complete. But if you have questions or concerns before you fill out an application, give us a call. We would love to sit down with you and go over your goals and find the best option that fits your needs. If home ownership is one of your goals, but you aren't sure if your credit is where it needs to be, now is the time to start preparing and make the necessary steps to move forward with this goal in the next few months. Your credit history helps determine the loans you will qualify for and the interest rate you will pay. It's really not that difficult to develop and keep a good credit score. Some just don't know where to start. Let us dispel some myths about this by reviewing your information and getting you pointed in the right direction for home ownership. By reviewing your credit report, your credit scores, and debt-to-income ratios, we can determine what steps you need to take to improve your scores or lower those ratios. Your payment history is one of the most important factors in determining your credit score. A single missed payment could spell trouble for an otherwise decent credit score. Whenever you apply for a credit line, you'll be subject to a credit inquiry. Having too many credit inquiries can not only hurt your credit score, it can also give you potentially false impression that you're borrowing more than you should be. A better way would be to open new accounts slowly over time so that your credit report isn't flooded with too many inquiries. Maxing out your credit limit isn't just bad for your finances, it can also damage your credit score. One thing looked at when determining your credit worthiness is your credit utilization ratio, which represents the percentage of available credit you're using at any given point in time. If your credit utilization ratio climbs above 30%, it can raise a red flag, even if you ultimately manage to make all your payments on time. Co-signing a loan for another borrower won't necessarily damage your credit, but if that borrower stops making payments on the loan, your score could be headed for trouble. When you co-sign a loan, you take partial responsibility for adhering to its payment terms. If the primary borrower falls behind, your credit might suffer. Closing an old credit card can hurt your score in more ways than one. This actually surprises most borrowers. If you have an older account in good standing, it can positively impact your credit history, boosting your overall score. If you have an older card with a more generous credit limit, it can help keep your credit utilization ratio to a minimum. If you don't have a pressing reason to cancel an account, retaining it could help preserve your credit score. Avoiding these critical mistakes can help you protect the credit score you already have or help you increase your scores to give you more purchasing power. JTS & Company wants to help you finance the home of your dreams. So let's talk about how strong your purchasing power is today. Give us a call. We are local, trusted, and experienced, and we want to help you with your home ownership goals this year. Thank you for joining me today, and be sure to tune in next week.
This JTS Mortgage Minute is brought to you by JTS & Company Mortgage Professionals.